What's up, guys? Welcome back to my channel. Malik here. If you're new here, check out my Instagram, Malik Tucker with 2 R's. You can follow me there, where I always put out snippets of what I'm looking into and even just some funny videos. I have my educational Instagram, which is at the Income Helper on Instagram, where we put out short snippets of information that can really help you out and get you more acquainted into this space. And then finally, I have my merch store, which is thechop.com. Yes, it's a whole website, and everything here has been designed by me, so everything is authentic. You won't see anybody else with these designs anywhere. So they're limited edition, so while they last right now, get them. All right, so this is on my channel. The last question someone asked is how to make money online trading stocks. So how I interpreted this question is the ways to make money online from stocks. But basically, this is not something that you can start without having any income. Like I would say, you definitely need a job to at least put money in to invest. And it's always good to have a stream of income so you can continuously invest, because if your investment is limited, that's where you kind of stuck yourself. You're just in a spot where you can't grow. So you need money to keep going in until your investments really start to float. So when you reach like a really huge amount where you see your investments going and you're very satisfied with that amount, sure, you can leave it to coast. But to begin, you definitely need a stream of income, whether it be working, whether it be real estate, drop shipping, forex. Those are good ways to make money and to start going into investing into stocks. So my ways to make money from stocks, the first one I would say is stock appreciation. So stock appreciation is when the value of the stock goes up, and if you had your money into it, you would have made money as well. So let me take you into my portfolio, where I have some positions there, which will be examples of ways that you could make money from stocks. So the first ticker here is Snapchat. So I have an average cost of $24.54, and you can see I only have 8.5 shares of Snapchat, but my cost basis is very low. So I purchased Snapchat at $24.54. Shout out to the cult. And Snapchat is at $75 now. So my total return on my investment is $434, which is a 200% return. So how much money did I really put into Snapchat? If you scroll down here and I go to my history, you can see where I was buying Snapchat for, let's see here, $49. I put $49, $101, $60, and that's about it. And then what that ended up turning into, that turns into around what, $600? Yeah, so it's currently at $600. So my small investment back then, when it was cheap, and back then is just last year, it turned into $600. So it's about, I went in with probably $200, and then I have a return of 200%, which is $400. So that's one way that you can really make money from stocks, is where the stock value appreciates and then you benefit from being an early shareholder or earlier shareholder. My second way to make money from stocks, and if that wasn't very in-depth for you and you want me to go more in-depth, just leave a comment below and I can definitely go more in-depth for anybody who wants to know more about this. My second way would be to get into dividend stocks. So my dividend stock, even though they are lowering their dividend, is still AT&T. I have the phone service, so I know that it's a company I'm not going anywhere. Unless there's a better phone service that comes out, I'm probably not going to switch my phone service, and they have me as a recurring customer probably forever, for the rest of my life. So AT&T is currently at $27.54. I have 94 shares of them at $28.63. So you can see where my total return is 103 negative. So I'm actually down some money on that. But AT&T is a company that is known for paying dividends consistently, almost forever. So if you look at my dividends here, November 2nd, I was receiving $2.09. February, I received $2.09. May 3rd, I received $14.05. And August 2nd, I received $20.26. So as you have more positions into these stocks, they pay you higher dividends. And dividends is not something that you work for. As soon as you put your money in there, you just get a return on your investments. Companies pay out profits to shareholders by using dividends. So I had 38 shares, and that was what was giving me $20.26. So now that I have 94 shares, I'm looking for a bigger dividend payout the next time, even though they lowered their shares. They lowered their dividends because they're partnering with Discover, the channel, and then they're going to issue growth shares. That's what I heard. They're going to issue growth shares, and they might lower the dividend. So AT&T might be more of a growth stock than a dividend stock, but let's see. I think this is my personal opinion. I don't think they're going to cut the dividend very much. And then you can see, if you just search how much does AT&T pay in dividends, and you can do this for any stock out there. AT&T pays 52 cents per share. So if you have 100 shares of AT&T, you get $52 every quarter, which would be every 3 months. So that's a way that you can make money from stocks, which is dividends. And then I wanted to slip this in as a bonus. So you have companies such as Apple that I think you would consider them both a growth and a dividend stock, because they are growing as well as they pay dividends. So you look at Apple here, I have an average cost of $116, and I only have 15 shares. I'm trying to get all of these shares up to 100 each, and I have a total return of $573 total. So that's where I have capital appreciation there, just by being earlier than some people into Apple stock. And then if you go down to my history here, you can see, go to dividends, you can see Apple pays me $1.85, $2.88, $2.88, $3.10, $3.32. So you see where they just consistently paying me out dividend. So that's a way for me to make just income coming in, different from the capital appreciation. So different stocks are different. So you have growth stocks, and then you have dividend stocks, and then I would say you have growth and dividend stocks that are really like valuable, such as Apple, Microsoft. So that's a mixture of the two. You also have the capital appreciation, and then you have the dividend aspect of Apple as well. So the third way, which is a little bit more complicated, and I would probably do a video about this, but I'm not sure how many people are really interested and how many people would understand. It would be a long, probably a 1 hour video just explaining the derivatives, because derivatives are options and selling options. So they are contracts that allow holders of the options to exercise certain perks, So let me show you derivatives. So this is a stock that was very hype like last week or 2 weeks ago, and I actually have 100 shares of this. I have stock appreciation, a total return of $386 there, because my average cost is $3.89, and I've been holding this one since June. So this has been a trade that I've been holding from June. But when you look into derivatives can make you money a lot faster, but they are very risky, and they can even go to zero. That's the thing. So derivatives are options that you can buy, and then they can increase in value very fast, the same way that they can decrease in value. So this is an option. So I have an option to buy BBIG at $5.50. I have an option to buy 100 shares of BBIG at $5.50 until, what's this, April 14, 2022. So I can exercise that contract up to then. So the market basically gives the option a value to say, all right, if BBIG is at $10, the option is worth intrinsically, I would say $450 at least, because I would be making an instant profit on that. So with options, you really try to get in early, you try to get time. There is a lot of little caveats to it, but I can show you how an option, and it goes back to the strategy from the trading fraternity, where you try to make the options free. So, and you have to try to get in before the market even realizes that the hype is going to take place. So on August 27, I purchased 3 of the 5.5 calls for $315. That's the total cost. On August 30, I sold one of them for $4.10. So that entire option play was free after I had sold out then. So as I said, options gain in value when the stock price either climbs, and then they will lose value if the stock price falls. It depending on the type of option you have. If you have a call option, you would be betting for the stock to go up, and then if you have a put option, you'll be betting for the stock to go down. There are more strategies such as strangles, straddles, butterflies, but those are a little bit more technical. So you can see I spent $315 here, and then I withdraw $410 here from one contract. And here I was trying to sell out a lot during the day, and then on the September 1st I sold one more for $430. So I'm up another $400 there. And then you can see where I still have one more, and the current price of it is $365 here. So I could sell out for another $365, but I have until April 14, 2022 for this to really expire. So this can mature into more, or it can come down to zero. If BBIG is under 5.5 by this expiration date, this number is zero. This option is totally worthless. So that's where options get a little risky, and derivatives are risky. So when you get more advanced into trading, that's when you start to do this. There are still not a lot of traders that really try to do options because they are very risky. They go to zero, versus where I have 101 shares here, and that will never change unless the company gets delisted. That will never change. I will always own these 101 shares. So there's another way to profit from derivatives or options, which is selling options. So I have 100 shares there, right? So since I have 100 shares, I have the right to sell someone. These options expire September 10th. So I can actually sell and I can receive $100 to say, all right, if BBIG is above 9, you can purchase my options at $9. But if it expires worthless, I would collect this premium. So basically, if I sell this option, I can collect $100 right now just for having the shares. And I'm putting up my shares to say, okay, someone, I will allow you to buy BBIG at $9. If it doesn't pass $9, I collect the premium, and that's it. That's what happens with options. They would have it expire worthless, and I would have collected the premium. So they're purchasing a contract, or I would say a coupon, to say, all right, BBIG is going to be over 9, so let me pay you $100, and then when it goes over 9, I will be able to make all of the upside, because I technically have a right to purchase 100 shares at $9. So those are a few ways that you can make money from stocks online. but you need money. You need an inflow of cash. You need to be able to be working so you can recover from blows, because you won't always make money. That's just the hard fact of it. Some people are lucky. Sorry about that. Some people are lucky and they make a lot of money, but still, just to protect yourself and to not take on too much risk, it's good to have a different job or a different cash flow. So if you get hit, you can always recover from your losses. So thank you for watching this video. Thank you for the comment, my brother, and then see you in the next video. Bye.